Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.
Hello and welcome to Nirmal, ladies and gentlemen. I'm Hiral Dadia. We have with us Khoon, head of Asia Research, ANZ, Economist, and Forex Strategist, joining us on the show. Welcome to the show, Khoon, and a very good morning. And happy to speak to you after a really long time as well. Hope all things fine at your end.
I'm all fine here. Thank you for having me.
Pleasure. Kun, my first question coming to you is let's start with what's happening with the dollar index. The kind of volatility that we are seeing right now, again, it's started that up move in the last one or two trading sessions. And a couple of factors that we were watching out for as well, especially with the risk of the US elections. Now, that's behind us. What is expected to cause this volatility to continue? And how do you see the move going forward?
Mm. Well, if you look at what's happening to currency volatility, it's definitely dampened down a lot compared to where we were at the start of the year. Now, when the pandemic was raging and spreading all around the world, we had really large and volatile moves in FX markets across the board, particularly in emerging markets where there was massive sell-off and the dollar strengthened sharply over March. But since then, as the pandemic started to initially get under control, and as we get a better understanding of the COVID-19, and as economic activity started to recover globally initially, I think that took a lot of the fear factor away. And since then, FX volatility has actually declined, and so has the US dollar. Now, as you mentioned, the US election now is out of the way. So going forward, I think what markets will start to focus on is the shape of the economic recovery over 2021. And typically, when you have an environment where global growth is looking much better, and especially if you have the rest of the world outperforming the US economy, that tends to be a backdrop for a weaker dollar. And that's certainly my expectation. I expect the US dollar to continue to weaken. There will be bouts of volatility, of course, but I think the overall trend is for the DXY index to continue to head lower.
Right. So, what are the levels, Kun, according to you, that we should be watching out for with regards to the dollar index?
In the very near term, 90.5 is a very important support level for now. Eventually, I believe that will break, and then we will be looking at pretty much a move towards sub 90. I think around the 85 to 88 range is potentially where we could get to for the DXY index next year.
Right. Moving away from the dollar index, moving away from the dollar index from here on, if you talk about the Asian currencies as well, especially in terms of where emerging markets are concerned, what's happening is last couple of trading sessions, Asian markets, Asian currencies have been lifted, and this is on the back of the election win after Biden. Do you think that's something positive and that trend is expected to continue?
I'm actually very bullish on Asian currencies for 2021. The US election result is certainly one aspect of that.
Hmm.
I believe with the incoming Biden administration, we will hopefully see the escalation of trade tensions between the US and China. And I'm hoping that a Biden administration will also start to re-engage the US in multilateral organizations and really start to re-engage in this region as well diplomatically. So we should see reduced overall tensions on the trade front, and that will definitely benefit Asian regions and Asian currencies. Now, apart from that, I think the economic recovery that is underway in Asia is definitely gathering momentum, especially in China. Now, China was the first to be hit with the virus. They were also the first to be able to successfully contain it. And as a result, their economy is rebounding very strongly. And there is still a lot of strong momentum in the Chinese economy. And that's very favorable for the Chinese yuan. And with a stronger yuan, that also serves as an anchor that will allow the other Asian currencies to also appreciate as well.
Right. So if we're talking of Asian currencies right now, where would you actually place the Indian rupee?
Indian rupee is actually an interesting currency. Now, on the one hand, you do have very, very strong inflows going into India, which is very, very supportive of the currency. But then on the other side, you have the RBI, which has been very, very active in FX intervention to prevent the rupee from appreciating. So you have these two contrasting forces at play. So the question is, who is going to win out? Now, at this stage, the RBI has shown that they are willing to commit and continue to intervene, building up their reserves to ensure that the rupee does not appreciate too much. And I think it's hard to fight against the RBI at this stage. But ultimately, I think the fundamentals and the flows will win out. So I do anticipate the rupee to appreciate, but I think the pace of the appreciation will lag behind the other Asian currencies, mainly because of the very firm policy stance that the RBI is undertaking, which is they don't want the rupee to be too strong.
And so basically, when we were talking, when we have been talking of the way the Indian currency has been performing, going ahead, according to you, what are the key events we should be watching out for that could be impacting the money market?
Mm. I think the extent of FX intervention has certainly driven money market rates a lot lower given the ample liquidity that's provided the domestic system. So the question then is around focusing on inflation in India. I think the MPC clearly is starting to express some concerns about the still stubborn inflation. And particularly if it starts to rise over the course of 2021, especially as there are signs that the Indian economy is actually starting to recover quite strongly. The latest PMI and composite PMI and other indicators are telling us that despite the still high COVID cases, activity in India is definitely continuing to improve. Now, if that starts to fan inflation, then the RBI might not want rates to be too low, or certainly that will limit the extent that they might cut rates further. And that might start to feature into their FX intervention thinking as well. And that could be one potential catalyst for them to perhaps rein in on their intervention activity. If that happens, then of course that will allow the rupee to appreciate. And again, another channel that the RBI can use to dampen down inflation is a stronger rupee. Ultimately, a stronger rupee would help to make imports cheaper and dampen down inflation pressures at the margins.
Right. And with all of this, now going ahead, another factor that we've been seeing is we spoke about the foreign inflows as well. The FI money that's coming into India has mainly been going into the equity market. However, if we compare the months of September and October, the flows into Asian bonds have more than doubled in September. Are we trying to say that, FI money will continue to flow into Asia, probably more than what we've seen in the last couple of months, and that's something which will keep us on the positive terrain?
Yeah, I believe that FPI inflows will be very strong heading into 2021. Now, the main reason why I say that, and this is for the Asian region as a whole, the reason why I say that is if you look at 2020 as a whole so far, year to date to November, even despite the strong inflows we've seen in recent months, for the year as a whole, we are still seeing overall net outflows. And the size of the net outflows from the Asian region is as large as what it was during the global financial crisis. So
Mm.
that just tells you the magnitude of the outflow that the region has experienced. Now, most of that outflow happened in the first half of the year, when the pandemic was spreading, when economies were going into deep recession. So that tells me that foreign investors are still underweight in the region.
Mm.
And with the expectations that growth is going to improve, particularly in Asia, and especially with the vaccine now on the way, I think that we'll start to see foreign investors really allocate a lot more into this region. And we're still in a world that's awash with ample liquidity. The ECB, the Fed, they are still expanding their balance sheet. So a lot of that flow has to go somewhere. And Asia, I believe, is very, very attractive. Now, in the case of India, yes, the FPI flows have been very impressive, particularly into the equity market. But India has also been attracting very strong FDI flows as well.
Mm.
There's been a lot of M&A activity, and a lot of foreign firms have announced deals or acquisitions in India. So on top of the very strong equity FPI flows, you also have on top of that very, very strong FDI flows as well. And that's one of the reasons why the flow picture has been very, very supportive of the Indian rupee.
Right. So, along with the Indian rupee, what do you make of the yuan as well? Because, in the month of September or beginning of October, the PBOC went ahead and lowered their forward reserve requirements as well. So, from here on, how do you see the movement in terms of the yuan?
I believe the yuan can continue to appreciate. My forecast is for 6.30 by the end of 2021. And I believe it can continue to appreciate beyond that. Now, my fair value estimate for the yuan is closer to 6. And I think with the yuan, you have to remember that we are coming from a period where the yuan had been undervalued. It had been battered during the US-China trade war. We saw the yuan weaken to as much as 7.20. So some of the moves that we've seen in the yuan this year is just a removal of those, if you like, the risk premium that had been placed on the yuan. Because now the trade war is pretty much over with the phase one deal being signed, and now with the Biden administration coming in, I think trade tensions will definitely de-escalate. So that's been very helpful for the Chinese yuan. Now, on top of that, the Chinese economy is recovering very, very strongly. And if you look at what's happening to Chinese exports, they are going from strength to strength. In the month of November, exports were up 21%, and their trade surplus for November hit an all-time record. So there's a lot of export receipts that will be converted into yuan. And you also have index inclusion of the Chinese government bond market in the World Government Bond Index from next year. So that's going to force a lot of foreign portfolio investors to start to allocate more into the Chinese bond market as well. So definitely a lot of factors are all pointing towards the Chinese yuan continuing to strengthen.
Right. And lastly, Khoon, with regards to where the euro and the pound go, all of us have been looking out as to what's happening with Brexit, and now they're saying that Boris Johnson is preparing for a no deal Brexit in the next 48 hours. And probably this is going to be a critical stage that EU is entering. Now, Johnson and Leyen are intensifying efforts to strike a deal. How do you see the pound and the euro moving from here on? Because clearly the pound has staged a recovery versus the dollar, as well as the euro as well. And again, that's causing some bit of volatility now.
Yeah, whether or not the UK and the EU can strike a last-minute deal, I really have no clue at all. I mean, this drama has played out for so long that it's actually virtually impossible to know how things are going to pan out. So all I can do is offer basically a a binary outcome. Now, in the event that we do strike a last-minute deal, that will definitely be taken very positively by markets, and that will definitely see sterling getting a huge boost. So I think we should see sterling rally to a new range of between 135 to 140 in the event that we get a deal and this whole drama and uncertainty is removed and we can stop talking about Brexit. Then sterling will be in a new higher range, and then we can move on. And now, in the event that the deal gets scuttered and the UK exits with no deal, which means that UK exports will immediately be slapped with tariffs when they enter the EU. We'll see the pound slip definitely. We'll probably head towards sub 130, but not to the levels that we saw immediately after the vote. But definitely, I think probably around sub 130 is where we can see sterling settle initially. Now, I think for the euro, whether or not we get a deal or no deal is not as crucial. It's more important for the UK. It's not so much for the EU. So for the EU, I'm still of the view that the euro can still continue to appreciate, especially given my view of weaker US dollar. So basically, if the dollar is weaker, then the euro has to be stronger by default.
Right.
So I still see the euro continuing to march higher, and I'm looking at a potential move in the euro towards 128 by next year, and eventually 130, because fundamentally the euro is still cheap and undervalued versus the US dollar.
Absolutely. I think that's the trend all of us are watching out for as well. And hopefully the flows into Asian markets do continue along with the growth as compared to developed markets. Thank you, Khoon, so much for joining us on the show. It was a pleasure to speak to you. Great insights on the money markets. I hope you enjoyed the conversation as well, and hoping to speak to you soon again, and stay safe.
Yeah, thank you. Same to you. Bye.